Yo, what's up you guys? Welcome back to another video. And in today's video, we are going to talk about the US debt ceiling that is about to make the whole US economy collapse. Yes, you heard it here first, my good friends. The US has got until the 1st of June to make things right. Otherwise, the stock market and the economy goes kaboom. But if you're new to the channel, a sub would be appreciated as I provide valuable educational content on a daily basis. If you do enjoy the content, please do consider smashing that subscribe button there as well. Now we know we had the core retail sales coming through today, as well as the retail sales month over month respectively. Both came through negatively. I'm not sure what we basically were expecting. Obviously the index were doing quite well. If you remember the last time I spoke about the index, it was sitting at that level, and I explained every possible reason why we needed to see that correction before that continuation to the upside. Now keep in mind, the dollar index has got until the 1st of June to obviously make things right. If they don't, then they will default. Now let's start with the most obvious question, because you're probably sitting there like, okay, we understand what you're saying, but what does a debt ceiling mean? Now I've got an article here from CNBC that reads, what is a debt ceiling, why is it important, and how would it affect you? Now just the key points here very quickly. It says a debt ceiling is the amount of money the US is authorized to borrow to pay its bills. Now that means the US has gone over and above the ceiling. Think of it in this way. Think of your salary, right? So your salary is the amount of money. So let's assume your salary is at $100. That is the amount of money that your employer pays you to pay your bills. Now what happens if your debt exceeds your salary? Then you've got the US economy. Next point reads over here, the US runs a budget deficit, meaning its revenue isn't enough to cover spending, which is exactly what I said there now. But you probably know someone with the same problem, right? That says here the government borrows money to make up the difference. So that's when you get to ask your friend, hey, I just wanted to find out, you can't borrow me 500 because I'll pay you back. Then you start making debt on top of debt to cover the debt. And the next thing you know, you're sitting with a big problem, right? And that is exactly what's going to happen with the index if they don't come up with a plan very soon. It says your Congress regularly suspends or raises the debt limit so the US can borrow more, but lawmakers are at an impasse. It says here, meaning the government could default on its debt as soon as June 1. Now you think about the government, they think about, okay, but you guys can just print as much money as you want to. Well, guess what? There's no more room to print any more money, and a lot of people are going to be impacted by this. Now this is what I don't like about the economy for every country, right? And just not the US. This is now, here where I live in South Africa as well. All of these decisions are made by these big people, but it normally affects the people at the bottom, which brings me to the last one. It says here, failing to pay the bills in full and on time may have serious economic repercussions, recessions, job losses, delayed payments of federal benefits like Social Security, high borrowing cost, and a plunging stock market as well, which basically covered what I wanted to talk about, with that tab over there. But it signals to you that everything that could negatively impact us, not us, but everybody else, and we've seen this. Everything that's happening with the index is happening to everyone else, right? I mean, the index fell, and then the ZAR fell as well. It's probably going to continue to fall because there's no plans of Eskom to basically improve what it is that they are doing at the moment, right? So you can see every decision that was ever made by the government is negatively impacting the people at the bottom. It's the same thing that you see here. I said, today I told someone, the only thing we have in common in South Africa is that everyone gets load shedding. And then this guy said to me, no, it's only the poor people that gets load shedding. Rich people, they do get load shedding, but they've got money for inverters and all of that stuff, which is the same thing that you see here, right? These people, they make decisions at the top of the league, but the people that gets impacted negatively is the people that is right at the bottom there as well. It says here, it could lead to a recession and a plunging stock market. Now, that is something we will know by the 1st of June. Until then, the dollar is going to continue consolidating like it's been doing, just consolidate to another consolidation levels. It says here the stocks dipped on Tuesday, which is today, as investors digested a lackluster forecast from Home Depot and turned their attention to a meeting between congressional leaders and President Joe Biden on the US debt ceiling. Now, you think about it in this way, right? You were probably hoping to waiting for some retail sales to come through, but people are having meetings at the back, and that we normally don't have keeping these tracks on, right? It says here Dow Jones traded lower at the 0.4%. The S&P fell 0.2%. I don't know where it fell because it's still in the range. Along with the Nasdaq composite, it says here Dow member Home Depot pulled back 3.3% after home improvement retail reported disappointing quarterly revenues and cut its full year's guidance. Now, I'm not going to read any further over here. We know that the retail sales dropped 0.4 compared to the 0.8 increase that was anticipated by the Dow Jones was pulled. But this is exactly what I was speaking about when I was re-evaluating the jobs report, and I said this is impossible for it to be what it is, right? And we're slowly going to see all of these things that the Feds and these numbers that the Feds had come up with, they're slowly going to unveil itself. Now, we obviously have room. We're still trading in bullish territory. We still have a 61.8 weekly time frame that we can expect the market to fall. Now, if you watch the breakdown that I did, I obviously told you guys that this move was going to happen, and that is exactly what the market had given us. Now we're about to ready for the next impulse. Now, if you take the Fibonacci from the low to the high over here, we had a 0.382 pullback. Now, the next level that I expect the market is still there. And then that is basically, as you look left over here, you can see this was basically the equal high that we expect the market to print, where it created support. Support got broken, market tested it as resistance, and we can expect the market to come back, test that level as resistance once again without any questions in there as well. So yes, I do expect this market to rally higher, and then from there we'll see where we are. But the market is going to run uncertain until they have some clear confirmation about what the plans are for the US. Other than that, you could potentially look for sales depending on which prop firm you are with, because some of them is probably not going to pay you out. So make sure that if you do take a very good trade on this, make sure that it is with a reputable company. Which brings me to the point that a lot of people had asked me if I do pause, if we do pause my Forex funds, FTMO, and all of these top firms. Yeah, we do now offer that services. I will leave a link in the comment section below that you can just follow to find out more about how those services work. Next up, we've got the Nasdaq. Now you can see this was still based off the last analysis that I did. Basically, nothing changed over here. We just printed new structure. The target will remain the same, as we know that is the resistance level of the weekly time frame that we still anticipate the market to go and hit over there. However, we do have structure that the market had broken above now, and we obviously expect the market to continue higher. Again, all of these moves are going to take place to give you a false perception that we could potentially see a bullish reaction for the Nasdaq to potentially go and create new highs or hit these levels over there, and then next thing you know, 1st of June come, and then we are going to be dealt with a problem. Now here we have that same situation over here. If you remember, I said that we can expect the US 30 to obviously go lower, and that is basically this move that I had said to you guys. And if you do need a point of reference, you can just go and revert back to that previous video that I done there as well. Gold also now still stuck at this level. I was expecting gold to potentially break out, but what we see here is is typical market manipulation. So you can see over here the market had basically been sitting in this range for this entire time. So a lot of people were probably buying and selling and then buying and selling, but unfortunately this is where gold is currently at now. And again, we are in a very tight situation at the moment, because gold is considered a safe haven where investors normally put their money when things does not go the way that it is supposed to go. To give you an example why the correlation doesn't sit well over here, if you look at the DXY, if you see the last 3 candles or first candles, 4 candles that are printed was bearish. Now if it was bullish, now if you look at it in that way, if the last 4 candles they printed was bullish, the last 4 candles printed by gold should have been bearish. It should have been a move to the downside, because that's how the negative correlation basically works. But we can obviously see that gold is still stuck in this range. If there was a move, if investors wanted to take gold lower, then we would have seen that move take place. But however, if we do have to go down down that route, where we could potentially once again see this move take place, then we could see gold move lower to potentially go and sit at this level. And then once we get that once we get that news through on the 1st of June, then we can definitely make a better trading decision. So I will just wait for clear break below that level. Even better, you can get that levels on lower time frames, because the price looks a lot clearer. So something like that. I would suggest that you probably just wait for that. Other than that, there's two things that the market does when it's waiting for high impact news. It will either go up to a lower price, or it will consolidate until there is certainty. At the moment, there's no certainty. There's a lot of uncertainty in the market because we are waiting to see the USD there as well. Next up, we do have we have the S&P 500. Now the S&P 500, which is why I said I'm not sure what they mean by that, but this looks like a graveyard of basically nothing going on here. Again, if you go on to lower time frames, you could potentially see the range a little bit clearer. So we'd probably go and look at these levels, and you can see basically I'm gonna take it all the way till here. There, so you can see this market had not done anything, so it would have just been a good buy and sell. And you know what that means? There's more liquidity down here, but the best thing to do is just obviously wait for the market to potentially give us a clear break. So if you go back on the daily time frame, I'll be a load setting, let me not say anything. But in any case, so we can obviously see over here that we have this market here on the daily range. So you obviously know how we're going to approach this. We need a clear break either way before we look for any buyers or selling opportunities in the market. Guys, that is it from my side. If you enjoyed the video, please consider smashing that thumbs up button, and let's try and get this video to 100 likes there as well. Thank you for your time, and as always, cheers for the ears.